So, today we are diving deep into a really fascinating story playing out in the world of AI. We're looking at how two absolute tech titans, Alphabet out of Silicon Valley and Baidu from Beijing, are turning AI into actual money. And, based on what we saw in their 2025 financials, they're taking wildly different paths into the future. This quote from the research we're looking at, it pretty much sums up the whole story. It really does. On one hand, you have Alphabet, just this powerhouse of global dominance and profit. And on the other, you've got Baidu, stuck in what the report calls a structural dilemma. Basically, they're facing some serious financial pressure. And that contrast, that's what we're digging into.
All right, so here's how we're going to break it all down. First, we'll look at how AI finally started making a real, tangible impact on the financials. Then, we'll compare the core businesses that got them here. After that, we'll check out their new growth areas, like the cloud. And then we're going deep on the race for self-driving cars. And finally, we'll wrap up by looking at the very different risks these two giants are up against.
For what feels like forever, AI has been all about potential, right? A huge investment now for some big payoff way down the line. Well, 2025 was the year all that changed. It's when the bills and the profits really started to show up. It's the moment the hype around AI turned into cold, hard numbers on a balance sheet.
Yeah, just to be super clear here, this analysis isn't about what AI could do one day. It's about what it's doing right now to the bottom line of two of the world's most massive tech companies. We're talking real numbers, real performance. So, to really get a handle on where they're going, we've got to start with where they are. They're foundational advertising businesses. And as you're about to see, the health and stability of those foundations, well, they couldn't be more different.
Okay, the first thing that just jumps right off the page here is the sheer difference in size. I mean, look at these numbers. Alphabet's total revenue for 2025 was more than 20 times what Baidu brought in. And get this, just Google's main business, search and all that, brought in more than 19 times the revenue of Baidu's entire company. That kind of financial firepower, well, it's a huge, huge advantage when you're in a race like AI that just eats up cash.
And these details really tell the story of how healthy those core businesses are. Alphabet has incredible pricing power. It keeps its traffic acquisition costs, that's what it pays partners to get search traffic, super steady. Baidu, meanwhile, is actually seeing its ad revenue go down, which puts them in a tough spot where they kind of have to exchange price for volume, essentially spending more to keep their share of the market.
But of course, being that big comes with its own problems. Alphabet's dominance is a real double-edged sword. 7 different products with over 2 billion users each. They've pretty much hit the ceiling on user growth. So now, the game shifts to using AI to make more money from each person. But that very size and power has put a giant target on their back from regulators who are threatening to break up the core of their business.
So, with their main businesses on such different paths, both companies are obviously looking for what's next. And the biggest battleground outside of ads is definitely the cloud.
For years, Google Cloud was this project that was growing fast but just burning through cash. Well, in 2025, that whole story just flipped on its head. The operating profit more than doubled to almost $14 billion. It has officially gone from a money pit to Alphabet's second huge profit engine.
Now, Baidu's story here is a bit different. They're the #1 player for AI cloud services in China, which is no small feat. It's a huge deal. But that growth is happening while the main company is really feeling the financial squeeze. So, unlike Google Cloud, which has this ridiculously profitable core business propping it up, Baidu's cloud is growing in a much tougher environment for the company overall.
And this number really drives that point home. In 2025, Baidu had to take a massive $2.5 billion write-down on its assets. This kind of tells you that as the company pivots hard into AI, the value of its older, more traditional stuff is dropping fast. It's a pretty stark sign of a company going through a really tough transition. All right, now for the really ambitious stuff, the moonshots. Both Alphabet and Baidu are pouring billions into a future of fully autonomous cars. But the way they're trying to win this race couldn't be more different.
Just look at these numbers from early 2026. Baidu's Apollo Go is just dominating in terms of sheer scale. We're talking over 20 million rides across 26 cities, and they're fully driverless in all their mainland China locations. Waymo is also fully driverless in some key US cities, but they're being way more cautious about how they expand, and they don't even share their total ride numbers.
So this huge difference in how many cars are on the road, it really comes down to a completely different strategy. Think of it this way. Waymo is playing the heavy asset game.
It's capital intensive, meaning they're spending a ton of money to perfect the tech, own their own fleet of cars, and control the entire ride from start to finish. Baidu, on the other hand, is going for a light asset approach. Their goal is all about speed and scale, getting their technology into as many cars as they can, as fast as they can by teaming up with partners.
And a huge part of Baidu's strategy to scale up is this thing right here, the Apollo RT6. Now, this isn't just some regular car they stuck sensors on. It was built from the ground up to be driverless. By just getting rid of the steering wheel and all the other parts you don't need, Baidu is trying to slash the cost of each car, which makes it way cheaper to grow their service. But that deep tech, heavy asset strategy from Waymo, it comes with a staggering price tag. The Other Bets division at Alphabet, where Waymo lives, lost over $7.5 billion in 2025 alone. It's a pretty wild number that shows you just how hard this problem is to solve and, well, just how deep Alphabet's pockets really are.
So here we are, two giants on two totally different paths. And that means they face two completely different sets of risks as they each try to build that long-term, unbreachable defense, that moat, in this new age of AI. When you boil it all down, the biggest risks for each company fall into two very different buckets. For Alphabet, the main threat is political. It comes from the outside, regulators who want to break up its incredibly powerful search and ad business. For Baidu, the threat is more about economics and geopolitics. They're heavily tied to the health of the Chinese economy, and they have to navigate some really complex rules both at home and when they work with partners abroad.
So, for example, Alphabet is constantly fighting these massive antitrust battles that could totally change the way it does business. Baidu, on the other hand, is dealing with things like new data security laws in China, which could make it trickier to work with their global partners like Uber and Lyft. And at the end of the day, a lot of it just comes back to the power of scale. In 2025, Alphabet plowed over $61 billion into R&D. Baidu also spent a big chunk of its revenue on research, but it was just under $3 billion. You just can't overstate how much of a difference that raw financial power makes. And that really leaves us with the central question here. As AI completely rewrites the rules, what's the winning play? Is it Alphabet's strategy, using an unbelievable amount of money to build deep, nearly perfect technology? Or is it Baidu's, using a faster partnership-based model to just get everywhere at once? Honestly, the answer to that is probably going to define the next decade of tech. This explainer was based on a report by HDIN Research,